New documents filed in a lawsuit brought against JPMorgan by the U.S. Virgin Islands allege that the bank turned a blind eye to evidence of human trafficking. The suit also alleges that emails, quote, even suggest that Stanley may have been involved in Epstein's sex trafficking operation.
The invasion of Libya, but everyone was convinced that it was all about currency, specifically Gaddafi's plan to introduce the gold dinar, a single African currency made from gold that would eventually replace the US dollar when trading with Africa. Many scholars have said that it's the kind of thing that one has to plan almost in secret and launch it when ready, because as soon as you say it, you'll have a bullseye on your back. You see, the world relies on the US dollar, giving America unparalleled economic dominance. Nearly 90% of all international currency transactions are in dollars. 60% of foreign exchange reserves are held in dollars, and almost 40% of the world's debt is issued in US dollars. Prevention of the creation of the independent hard currency in Africa that would have freed the continent from its economic bondage. To give some quick context, it is banks, not governments, that create most of the money in Western economies.
A robbery so big, its impact can still be felt 150 years later. And like most of the biggest robberies in the world, nobody was punished.
Hey guys, welcome to my channel here. It's me here, Lavender here, and today I'm back with another anti-capitalist activism video. Today I'm doing the pure evil, the bank industry files, a deep dive into this. So let's get started into this political activism video. We all know banks are bad. Anyone remember the quote, give a man a gun, he robs the bank, give a man a bank, he robs the world? They love keeping you in a cycle of debt slavery, and financing imperialist wars by bankers is not a new enterprise. It has been going on for centuries and hundreds of years. Banks have always profited from war because the debt created by them results in ongoing profit, and the cycle continues. Apart from direct lending to the government, banks benefit from war through other channels. They collect commissions by helping warring governments to sell their war bonds. They benefit by financing the war profiteers that provide goods and services to the military, and the demand for which intensifies during warfare. Banks also profit by financing reconstruction following the end of hostilities and from the business opportunities arising in occupied territories. The rich rule over the poor under capitalism system. The borrower is a slave to the lender. Debt absolutely is a form of slavery. In fact, vocabulary.com describes slavery as to be held captive and unable to pursue your own life. If you have a large amount of debt, you know that feeling and what I'm talking about. Debt has had a way of increasing your anxiety, your mental health, controlling your movements, and impacting your everyday life. When you are in debt, you are a financial slave to your lender. The colonizers that founded the United States used slaves as collateral. Slave-backed debt was a depravity that treated black men and black women as fonder to those only worth was the wealth they gendered for others. The entire financial services industry emerged from slave-backed loans before the Civil War through what one economic historian called an orgy of bank creation. Citizens Bank and Canal Bank of Louisiana, which both ultimately merged into JPMorgan, accepted approximately 13,000 slaves as collateral for loans between 1831 and 1865. When some of these loans defaulted, the bank ended up owning approximately 1,300 slaves. The Bank of Charleston, which eventually became part of Wells Fargo, also accepted slaves as collateral on loans. Anyone who ever bought a home or mortgage on a car installment, invested in the stock market, bought insurance, or opened a savings account has enjoyed systematic privilege. The white people. The institutions used in these transactions were built on the bodies of black men and black women who never accumulated anything from this enormous wealth they generated. This makes a strong case for reparations. True crime case, how a bank and capitalism robbed former African slaves, of $66 million in today's currency. The incorporation of the Freeman Savings and Trust Company began in 1865, was created with the banking needs of formerly enslaved black soldiers during the Civil War era, Abraham Lincoln himself proclaimed this bank is just what freedmen need. On March 3rd, 1865, he signed the Freedmen's Bank Act and authorized the organization of a national bank for ex-slaves in the United States. The number of ex-slaves, depositors, and customers depositing money into this bank grew rapidly from 1865 to 1870. There were a total of 34 branches of this bank were established in cities across America, including Atlanta, Georgia, Charleston, North Carolina, Philadelphia, Washington, D.C., etc., just to name a few of the cities that this bank was in. A journalist in 1867 reported, go to any of these banks, and the office is found full of Africans depositing small sums of money. Unfortunately, the saving dream did not yield the desired results that were supposed to be. The dream of prosperity that the African slaves had and abundance slowly but yet quickly entered a downward spiral into severe fraud, typical capitalism, typical capitalist behavior, and discriminatory lending and racism. Congress in 1871 authorized banks to provide business loans and mortgages for the former black slaves, but ironically such mortgages and loans were usually administered to whites at the expense of black depositors. A combination of risky investments and lending patterns and massive corruption, typical capitalism, at the upper level of management, aka where the capitalist pigs are themselves, due to greed and, just pure greed, because that's what capitalism is, the bank empire began to collapse very quickly like a stack of cards. According to a Black Past report, by 1874, massive sketchiness, sketchy situations, massive fraud, aka massive corruption, all among all the management and among the board of director himself had all taken its toll on the bank, and pure disaster happened. On June 29, 1874, the Freedmen Bank was officially shut down and closed forever. At the point of closing, over 60,000 black depositors and customers were robbed of the modern equivalent of $66 million. And as a result of this whole situation in capitalism and the failure of the bank, many black depositors and black customers, became distrustful of white banking community systems, especially since the Freedmen Bank was established and managed by white colonizer men. The bank's total corruption not only robbed African former slaves of their life savings and all their money, but it also had a severe psychological mental impact on them, causing many to give hopes and dreams of, along with their savings. The capitalist pigs on Wall Street are part of the capitalism system that has created some of the greatest inequality the world has ever seen, and they continue to do so and perpetuate that. The capitalism bougie aesthetic and wealth addiction is celebrated in our toxic capitalism society. The history of U.S. imperialism can be found in the archives of Wall Street's oldest, largest, and most powerful institutions. A deep dive into the vaults and ledgers of banking houses such as Citigroup Inc. and JPMorgan Chase & Co. reveals the story of capitalism atrocities and bloodthirsty empire whose narrative is not of morally pure and inspiring economic growth, technology innovation, market expansion, and shareholder accumulation, but rather of blood and labor, stolen sovereignty, and perverted resources, military occupation, and monetary control. The Caribbean was ground zero for U.S. imperialist thinking. Wall Street's first experiments in internationalism occurred in Cuba, Haiti, Panama, Puerto Rico, the Dominican Republic, and Nicaragua, often with disastrous results for those countries and colonies, and often for the imperial banks themselves. Yet where there was expansion, there was also pushback. The internationalization of Wall Street was met with local resistance, refusal, and outright revolution and revolt. And just as the history of imperialism has been excised from popular narrative, so too has this history of Caribbean anti-imperialism and autonomy. The history of imperial banking and racial capitalism begins at the end of the 19th century at the historical horizon where the project of U.S. settler colonialism that spurred the financing of the West became the enterprise of the U.S. territorial colonialism in the Caribbean and Asia. Buoyed by unprecedented wealth and boosted by expansionist feudalism, following the victory over Spain in the Caribbean and the Pacific, New York City's bankers and merchants believed that the organization of imperial banking system, one that could compete with Europe's long-established institutions, was critical to the global rise of the city and to the colonization of Wall Street's position in international finance, trade, and commerce. With these ambitions, bankers and business people set their sights on asserting control over the trade of the Americas. They sought to control local central banks, establish U.S. branch banks, take over commodify financing, reorganize monetary systems on a dollar basis, and refinance European-founded sovereignty debt. This project of internationalization was explicitly encouraged and supported by the United States government. The War and State Departments required financial agencies to support the infrastructure of U.S. colonialism, and financial institutions were important conduct of the colonial policy and financial and commercial diplomacy. Bankers, however, needed little prodding and persuading to move overseas, extending their influence to the sugar plantations, railroads, and financial systems of Haiti, Cuba, Santo Domingo, and Nicaragua. The U.S. state made both implicit and explicit assurances that it would intervene should local conditions turn against U.S. interests and business interests or disrupt the payments of interest or custom revenue. Founded in 1812, Citibank, the purveyor of today's Citigroup, emerged as the largest and most important imperial financier in the United States. At the center of the story was the National City Bank of New York, the precursor to today's Citigroup Inc. Founded in 1812, it emerged as the largest and most important imperial financier in the United States. Beginning in 1914, it also made the Caribbean the enterprise of the largest foreign branch bank system of any U.S. banking house, with Cuba the jewel in its crown. When conducting business in the Caribbean, U.S. bankers understood people of color, whether Africans or indigenous peoples, through the same racist lenses they viewed them through at home. In others, they replicated racial stereotypes in order to further the expansion of the white supremacist control of the region, with returns to investment found not in an extradition of capitalist values, but in ledger of white racial dominance. Wall Street helped reorder the economies of the Caribbean and Latin America along racial lines. One example of this practice can be found in Citibank Vice President John H. Allen, one of the new slate of managers and vice presidents appointed by Vanderslip as part of the bank's modernization and its bureaucracy. Allen aided the bank's expansion into Cuba and Argentina and was the manager of Citibank-controlled Banque Nationale de la République de Haiti in the 1910s. The Citibank's foreign trade journal, The Americas, Allen evoked a picture of Haiti that would have been recognizable to white U.S. audiences for its tropical setting. Cockfighting and card playing, Allen asserted, are national pastimes. These, together with a supply of Haitian rum, are all that is necessary for a Haitian citizen's perfect day. He claimed that during his visits to Hawaii. Indeed, Allen himself was deeply involved with the decision to send U.S. Marines to Haiti in 1915 and what would become a 19-year military occupation. Citibank had been interested in Haitian investments since about 1910, but Vanderslip sought to use some of that integral railway and dock investments as a springboard to control the Republic's financial system. Haiti's international political conflicts, fueled in part by outside agitation and interference from both the United States and European spectators, created disastrous terms for business. In response, Citibank's Roger L. Furnham, who viewed the Haitian people as nothing but grown-up children who required the Peronistic guidance of a stronger power drafted from a document arguing for U.S. military intervention to stabilize the country and protect U.S. financial and commercial interests. The Farnham Plan, as it was dubbed, was realized in 1915 when Marines landed to restore order following the assassination of Haitian President Benjamin Gillen Sam. The occupation provided the platform for the city's bank takeover of the Benedict National, while making Citibank's imposition of $30 million loan to the Haitian government almost risk-free. Vanderslip described Haiti as a small but profitable piece of business for Citibank, but such profits came at a cost: the suppression of a series of peasant insurgencies that left thousands of Haitians dead and dozens of villages burned to the ground. Hundreds of Haitians were jailed or forced to work on chain gangs, serving as a reminder to many Haitians of the days of slavery. Citibank was not the only U.S. financial institution charting an imperial turn. It was joined by its neighbors on Wall Street, sometimes as collaborators involved in a collective project to consolidate the financial realms of the U.S. imperialism, sometimes as rivals embroiled in bitter competition. Chase Manhattan Bank, for instance, made an aggressive push to display Citibank in Panama, fighting Citibank for pride of place in financing of the dictatorship of Guerrero Matro I. Morales in Cuba. Meanwhile, Wall Street's unincorporated and private investment banks, including JPMorgan and Co., Spear and Co., and Kahn and Loeb and Co., began floating in the public debt of Caribbean, Latin America, and Asian countries, states, and financing railroad and port projects. These private bankers had initially grown up and premised by using their strong European networks and their close family ties as a conduct to market U.S. government bonds and corporate securities across the Atlantic. Now increasingly they sold Caribbean and Latin America debt in the United States. Meanwhile, the local banking sector in Cuba was completely destroyed. As Wall Street's financial imploded, so did the racial bolsters on which it was constructed. A wave of anti-imperialist and anti-Wall Street sentiment rose across the Caribbean islands. The paper's one-time editor, George Padmore, also cataloged global conditions of black exploitation in his life and struggles of Negro toilers, published in 1931. Padmore was a young black Trinidadian functionary for the Communist Party, a prolific writer. Lives and struggles of Negro tailors present a sweeping comparative account of the conditions suffered by black people in Africa and Africa dysphoria, and includes attacks on early 20th century U.S. expansionism overseas, and with it the transformation of Haiti as a whole, and along with the Dominican Republic and Liberia and Aspina into colonies of U.S. finance capital. Padmore assails Citibank's imposition of debt on the Dominican Republic to the transformation of Haiti into an American slave colony during the U.S. occupation. He lashes the black ivory trade, the conscription of Haitian workers to the Cuban plantations of the General Sugar Company and United Fruit Company. He argues that Haitians were bought into the country in the same ways that chattel slaves of the former days. Haitians were underpaid, in debt, and to their contractors, and housed in segregated and unsanitary conditions and housing. At the same time, U.S.-backed corporate interests became the subject of a radical anti-imperialist Caribbean literature, a literature that can be viewed as counterpoint to the rhetoric of Citibank and attempts by Wall Street to visualize the Caribbean, to borrow Allen's term, for purposes of exploitation and accumulation. Cuban poet Nicholas Glenan's West Indies, 1934, for instance, is an example of this. In Cuba, attempts to renounce Chase Bank's debts and default on payments were stalled by the Cuban courts, and it would take another 3 decades before Wall Street was finally expelled from the country. Cuba broke the chains which tied its fortunes to those of the imperialist oppressor, redeemed its riches, reclaimed its culture. Now the country is thriving, and the capitalist pigs are mad. The U.S. imperialists are mad and they're seething with rage. Meanwhile, Citibank and Chase Bank would spend the next decades struggling to return to its heady hands of unregulated expansion and unbounded freedom that characterized by the early 20th century historical of imperialist banking. France and the United States government killed Gaddafi for his gold and oil. With the release of Hillary Clinton, the war criminals' emails by WikiLeaks, the public now knows and sees the true colors of NATO and the organization that's called NATO, and their Western bloodthirsty imperialism all over the globe. According to the IMF, Libya's central bank is 100% state-owned. The IMF estimated that the bank has nearly 144 tons of gold in its bank vaults. NATO went there for one reason and one reason only: to loot Libya's gold and to create sabotage. Pan-Africanist Gaddafi, the former president of the African Union, had been advocating that Africa use the gold so plentiful in Libya and South Africa to create an African currency based on the gold dinar, a new currency that would rival the dollar and the euro and the pound. The U.S. was scared that it would replace the U.S. dollar and give Africa the freedom to break their slave chains away from the U.S. Thanks to the United States government as a whole and these banks, Libya now has open slave markets. It used to be the most prosperous African country in the world before, but now it's not. The Panama Papers that shows how some of the world's wealthiest and most powerful people legally hide their cash, nestled within the database of 200,000 companies, trusts, foundations, and funds incorporated in 21 countries, is information about where many of the world's largest banks legally hide and shelter cash for rich people. The offshore and tidally banks and their subsidiaries are using to shelter cash. Among them are the top American banks like Bank of America, Wells Fargo, JPMorgan, Chase Bank, Citigroup, Morgan Stanley, and Goldman Sachs. The database also named foreign banks with a strong presence in the U.S., including HSBC, Barclays, Deutsche Bank, BNP, Paribas, Societe Generale, ABN AMRO, Credit Suisse, and UBS. Estimates that nearly 75% of all offshore private wealth is either directly or indirectly concentrated in the hands of the world's top 50 private banks, particularly about 20 financial institutions, which each have at least $100 billion in private cross-border assets under management. From 2005 to 2010, these banks include UBS, Credit Suisse, Citigroup, Morgan Stanley, Deutsche Bank, Bank of America, JPMorgan, Chase, BNP, Paribas, HSBC, Goldman Sachs, etc. According to the Tax Justice Network, their total private assets under management came to $12.2 trillion, but are thought to have grown since then. JPMorgan bank executives reportedly maintained contact with human trafficker and sex trafficker Jeffery Epstein after dropping him as a client. JPMorgan, the world's largest bank by assets, is being sued by an unidentified Epstein accuser in the U.S. Virgin Islands, where Epstein owned a private island, for benefiting from human trafficking by ignoring internal red flags about his behavior. Mary Endors, who now runs JPMorgan's $14 trillion assets and wealth management business, visited Jeffrey Epstein's townhouse on Manhattan's Upper East Side in 2011 and in 2013. John Duffy, who ran JPMorgan's private bank, also allegedly visited the townhouse in early 2013. A month before the bank renewed Epstein's borrowing and authorizations, a third JPMorgan executive, Justin Nelson, met with the disgraced financer about half a dozen times between 2014 and 2017, the report said. Some of those meetings have been characterized as concerning. A multi-billion-dollar donor advised philanthropy fund Epstein had pitched to JPMorgan that could help bring wealthy clients in. The lawsuit alleges that Epstein's behavior was widely known at JPMorgan Bank. In one instance, senior executives made jokes about his interest in young girls. On another hand, other accusations included that JPMorgan knew Jeffrey Epstein routinely made $40,000 to $80,000 cash withdrawals several times a month. In a deposition, Euro said that her employer had been aware that Epstein had been accused of paying cash to have underage girls and young women brought to his home 7 years before the bank dropped him as a client. The biggest banks in the world are financing fossil fuels in the trillions of dollars. The report found that the 60 biggest private banks in the world have financed $3.8 trillion in fossil fuels in the 5 years since the Paris Climate Agreement was signed in 2016. JPMorgan Chase was the world's worst fossil bank, contributing $51.3 billion in fossil fuels financing last year alone, and a total of $317 billion from 2016 to 2020. Citibank, which spent $48.4 billion last year and a total of $237 billion since 2016. Wells Fargo came in third, etc. Banks called out for their role in financing the plastic pollution crisis and problem. A new report bankrolling plastics because they are lending vast sums of money of capital. Capitalism puts profits over the lives of everything. Leaked Bank of America memo. We hope conditions will get worse for U.S. workers. Financial behemoth privately fears that regular people have too much power and leverage. Former employees of Wells Fargo, aka whistleblowers, tell that a toxic, high-pressure sales culture at the bank drove some workers to deceive customers and open unauthorized bank accounts, even in the bank's own headquarters building in San Francisco. Wells Fargo is embroiled in a scandal for taking advantage of customers by opening as many as 2 million accounts without their consent. One employee who worked at Wells Fargo compared the job she had and the work atmosphere as a whole to being in an abusive relationship. Most women experience horrific sexism and harassment while they're on Wall Street, whether it's by their bosses trying to sleep with them, casual conversations where women are degraded, the gender wage gap, etc. And there are all over other ways that the women have experienced sexism, overt sexism. In 1996, 23 female brokers sued Smith Barney for harassment and pay discrimination in what would become known as the Boom Boom Room case. Nearly 2,000 women nationwide joined in the lawsuit after it was granted class action status, and in the end, Smith Barney paid the woman $150 million in settlements and arbitration awards. The way Wall Street firms resolve sexual harassment cases continues to protect perpetrators and firms. Large settlements are paid, but the men who either committed the crime and did the bad behavior will often remain, and there won't be any consequences for them. In 2010, 3 female employees of Goldman Sachs, a former vice president, a managing director, and associate, filed a class action lawsuit in federal court against the firm, claiming it had systematically discriminated against women in both pay and promotions. Sheen Oyster eventually reported that the groping and sexual harassment to her supervisor, but he took no action the lawsuit had claimed.